Welcome to our Savvy series. I'm Catherine Magana here with Rachel Ivanovich. And today we're going to have a discussion on how to integrate non-qualified stock options, also known as NSOs, into your financial plan. And so when we look at non-qualified stock options, a lot of time many successful professionals, they've accumulated some wealth through equity compensation. And a lot of times they forget to look at the bigger picture with the financial retirement plan. And what we find is sometimes the focus is just on taxes, which is important. And so it's usually the question of how much will I owe? When should I exercise? And should I wait for the stock to go higher? While that's really important, but the reality is you should really be looking at, in addition to that, how does this affect your not only affect your taxes, but how does it affect your retirement cash flow, diversification, liquidity, estate planning, Medicare premiums, and kind
so
of
many things.
Yeah, a lot of money things. And so it's not really just a, hey, I want to do this exercise and what are the tax consequences? How does it tie in with everything that we're doing? So there's a lot of moving parts, and we thought we would dig in.
We thought we'd start with some definitions
Yes.
because these are very complicated and they do affect your taxes, like Catherine was saying. So non-qualified stock options, they're more traditional stock options that don't meet the certain IRS requirements that allow special tax treatment, like incentive stock options. So with NSOs, you'll be taxed when you exercise the stock options. And the IRS levies ordinary income tax on them. So that's kind of the difference between the two. But we wanted to touch on some other definitions and terms as well, because when you are granted this equity compensation with, let's just say you get a new job, oftentimes you're like, what does exercise actually mean? What does grant price?
Well, and there's a lot of jargon. I think we're in the business and we see
Correct.
it, and then all of a sudden you're sitting there as an investor or client thinking, well, wait a minute, what does this all mean?
Exactly. So we thought we would just do some definitions. All right, so let's start with exercise. So exercising a stock option basically means you're purchasing the company's common stock at the grant price. And that means the grant price, they say this is what you can buy it for, even if the fair market value is currently higher. And that really becomes your benefit there. Then grant price is the price at which the option is initially granted to you. And this is also referred to as the strike price or the exercise price. So typically under most plans, the grant price is going to be quite a bit lower than the fair market value at the time the grant's made. The next term we're going to talk about is spread or in the money value. And so that's the difference between the grant price and the market value of the stock at the time that you exercise or buy it. So if the market price is below, the options are said to be out of the money or underwater, and you probably don't want to do it, don't want to exercise.
Yes.
The option term is the length of time that you, as the employee, can hold the option before it expires or you can't buy it anymore. So at that point, you can't exercise. And then finally, vesting is a term, and this is a requirement that has to be met in order to have the right to exercise or buy the option. So usually this requirement is time-based. So it's either you have a vesting schedule, so it's a year, 2 years, 3 years, or so on. But it could also be dependent on a particular triggering event, such as a performance goal that you have with your company, or maybe there's an initial public offering or IPO with your company. So those are some terms we thought were important to go over. But one of the things about NSOs or non-qualified stock options is oftentimes people get caught off guard because when you exercise, it does create ordinary income that gets added to your W-2. And that when you get your W-2, you'll actually see it in box 12. There will be a code V as in vesting, let's just say. And it shows the amount that was the difference between what your strike price was and what the fair market value was. So that gets added to your W-2, and you may not actually see that money if you exercised and didn't sell.
Interesting.
So that's something, because when you it looks like wealth that you have on paper, and you may not have the money to pay the taxes, so it gets a little tricky, and it's.
And you don't want to get tripped up on the tax part, like
Correct.
you said. You want to make sure you have enough
But there's,
money.
like you said at the very beginning, there's so much more than just the tax piece
Yeah.
that you need to plan for.
Exactly. Okay, so let's talk about kind of concentrated wealth. So one of the biggest risks we see is if you do have stock options, that potentially now you have a concentrated position in one stock. And so while you're working with your employer, which is great. You're earning income, you get bonuses, retirement and healthcare benefits, and then now potentially you have some of your wealth tied to this company. So then you have to look at, okay, well, how much of this stock do I own overall with everything that I own? And is it such a concentrated position that if something happens to that company, will you be devastated? And so that's where, once again, overall looking at the overall plan, and not to say that you don't want to have growth and have access to these stock options, but the reality is you also want to make sure you're diversified, because it does there is some vulnerability there if you are not. And so it's a difficult position to be in, but that's what we're here for, is to really help you navigate and look at, how does this affect your overall plan.
And one big mistake that we see often with investors or clients is they look at exercising those NSOs as an all or nothing decision. But oftentimes it is more of a phased strategy. So you want to be working with a tax advisor, with your financial planner, to look at, is my income going to be lower this year? Do I have a situation where I have, can I fill my tax bracket? So it isn't an all or nothing decision. So lower income years, retirement transition years, or years where you have really large income tax deductions, it might make sense to do the exercise in that year, because then, but you're looking at, okay, what's my tax bracket? How much more room do I have in that bracket? And does it make sense to do more or less of an exercise?
So then that ties into taxes require liquidity.
That's right.
And so many investors do underestimate how much cash will be needed for the non-qualified stock options and when they're exercised. And so it's important that you plan in advance. So you don't want to be forced to sell other investments or sell things that you don't need to. So obviously making sure that you are intentional with how much money you think you might need to cover the taxes. And then you really focus from, how do I avoid taxes? But it is part of the whole kind of program.
Planning process.
Yes. So it's just having a different mindset about it. And once again, you've worked hard, you've earned some, some compensation, and let's just make sure you're doing it in a mindful way.
The next section we want to talk about is behavioral challenges, because oftentimes people really are worried about their stock options, and there's fear about selling too early, or maybe that you have fear about missing upside. And oftentimes people, when you're working for the company, you have an emotional attachment to the company because you're working there, you're watching the company grow. But during really strong market environments, like Catherine, you were saying, the concentrated positions can create overconfidence as well. And we really want you to be looking at retirement planning and not just maximizing every dollar of upside. The planning goes way beyond the behavioral side of it. So
absolutely. So looking at not just in isolation, really factoring in. Are you doing any Roth conversions? Is there any Medicare planning, estate planning, charitable goals? How does this all tie together? Because large exercises that you do potentially could affect your Medicare and IRMA pricing later, and so you
depending
have to,
on how old you are and how close to retirement.
Exactly, as well as it may affect Social Security taxation, and so once again, it's looking at everything combined, and once again, depending on your age as well.
And I think that's really key with the Social Security taxation too, because a lot of people don't realize that Social Security is taxable and how much of it is taxable, and it really depends on what your other income is. So I think that is key when you're thinking about exercising stock options or not. But one of the most important mindset shifts is understanding that tax efficiency is not just about minimizing taxes this year, because sometimes you can be strategic and you pay a little bit more today to create better outcomes for the long term. And you really should be looking at lifetime tax efficiency, not just this year's tax efficiency. And you also want to look at retirement flexibility, what makes sense for your portfolio and for overall for your investment strategy, because you really want to preserve whatever your options are. I think working with an advisor is important, having a plan, and not looking at just a single transaction, but instead viewing the NSOs as part of a roadmap for your financial future.
And so one of the things I think that we've seen in the past with some clients is they say, oh, well, the taxes got withheld and, it's already taken care of. But the thing that you have to consider is, okay, well, how much got withheld? And then Are you married? Is there other income sources? Do you have, what's
the big picture?
Yes, because I do think you don't want to get caught off guard. Then did they withhold enough for you? So it's definitely important to look at everything. And so I know we talked a lot about, we've been covering a lot about
stock options. The last
stock
few
options.
sections.
I know the ISOs, the NSOs, and non-qualified stock options. And so once again, we want to stress the importance of not only financial, retirement, and tax planning, but also looking at how is this, what kind of position do you have with the company. And so once again, having some goals in place, it's as you're accumulating your wealth, and we want to be intentional with you, making sure that you have a plan that works. So if you'd like to set up a complimentary strategy session with us or a call, we're happy to go over your personal situation, and you can reach us at 760-692-5700. And we want to thank you today for getting savvy with us about your finances, and remember to savvy up. Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results, and the indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. Savvy Woman Wealth Management is a registered investment advisor with the SEC.